Just giving a bit of a wrap-up for the 2023 calendar year, especially from a quantity surveying perspective, and just to give my thoughts on the year. I've been buffeted by both sharply rising interest rates and a 30% rise in construction input costs, as well as the after effects of the COVID disruption and the associated structural changes, such as the move towards a work from home scenario in some sectors, especially in retail and the accommodation and home building areas of the sectors were struggling. Residential developers are often caught in fixed price contracts faced with sharply rising material costs, and project delays are in many cases making losses and struggling with rising debt servicing payments. Bankruptcies in the construction industry are now running at an annualised rate of around 3,000 companies a year, roughly twice that of pre-COVID levels. These contrasting fortunes are reflected in some extent in the aggregate activity figures. So the total residential construction activity has declined over the last year and will remain subdued for the next 2 years under the weight of that higher mortgage rate, and also a decline in alterations and additions as the surge related to the home builder subsidy and the work from home subsidies. Approvals for new builds are declining, but there's still a substantial pipeline of work that will sustain activity in the short term, with downside risks for 24-25 if cash rates need to continue to rise. The policy response to the housing shortage is expected to boost multi-storey unit and apartment investment in the next few years. At the same time as residential activity has declined, infrastructure construction has surged with a raft of public transport infrastructure projects and a surge in the approvals and commencements in that renewable energy space. In the non-residential building activity space, it's been relatively stable. For dwelling investment, there's been a tension in the outlook between the National Cabinet's aspirational goal of building 1.2 million homes over the next 5 years and the requirements of monetary policy to slow the economy to bring inflation under control. And in the short term, we expect that a coordinated government action in terms of land releases, rezoning and development approvals and concessional finance to lift that multi-storey apartment construction to increase the density of our capital cities will be required. And so there will really need to be some change around that. And just in the last week and in the last month to wrap out the year and announced last week was the now Commonwealth ban on engineered stone from July next year. So we'll see some changes going into next year on the back of that, but certainly been an eventful year. And we thank, on behalf of Mike and I and MCG Quantity Surveyors, we thank everyone that's been in our sphere, in our space, and certainly behind us in trying to deliver a quality service and quality data and relevant data to the sector. So Merry Christmas, happy holidays, and have a wonderful end of 2023.